Okay, and now on to our second question for our monthly Q&A segment. Hi, John. We will be closing a condo in Brantford very soon. It's a one-bedroom with a den, approximately 500 square feet. I was just wondering, what are the advantages and disadvantages of claiming it as an investment property used for rental purposes versus the advantages and disadvantages of the personal use of my son and his girlfriend and claiming it as a second family home? I appreciate your input. Thank you, Layla.
Mm. Interesting question. So I think they're confusing a couple of things. I mean, so it sounds like Layla's trying to argue that the investment condo is in fact the principal residence because her son lives in it. But you can't really do that. I mean, each person, I actually think it's each family now, has one principal residence for a given year, and you got to pick which one it is, which means it cannot be, assuming Layla owns their own home, well, that normally would be their principal residence. You can't say that the condo is also the principal residence. Oh, and by the way, our cottage is also our principal residence because we spend a lot of time there. Doesn't really work like that. You have to kind of pick one property as your principal residence. So assuming she owns, it will likely be obviously her principal residence, her home that is the main property. Now, what would happen with the condominium? I mean, she would eventually, once she sells it, have to pay capital gains on it, right? The only circumstances, and again, I'm going to qualify everything by saying I'm not an accountant, so double check it. But most of this stuff's, I mean, this stuff's pretty straightforward. But the only circumstance under which, she could argue, or they could argue it's a principal residence, is if the property was jointly owned with her son, right? So if they both were owners of it, I mean, then what would happen is the son's portion of the gain is effectively tax-free because the son lived there. It is a principal residence for the son. It is not a principal residence for Layla. It is an investment for her, right? So the tax treatment would be quite different for each of them, right? And I actually had a client who did actually was interesting. It was very similar where they're selling a commercial property, but it had residential on the second floor. So like normally you would think these types of properties are all investment, right? But the one owner, and there are two owners, happen to live in the residential property on the second floor, right? So the tax treatment for him is very different from the other owner who had it just as an investment, because the principal, like the principal residence portion of the residential portion of the gain is basically tax-free, right? Whereas the other owner doesn't have that benefit. So the tax implications could be different for both people depending on how they're using the property.
Thanks. So the list of what John is not, an appraiser, an accountant, is growing. as, as usual,
I like
we
to
always
qualify
say,
some. Yeah.
John is providing his expertise as a broker in real estate. Always consult the right credentialed and licensed professional for these particular questions. And John, just to conclude, Layla touches upon tax implications, I guess, if she holds it and rents it out. Presumably not to her son, but I would assume somebody else.
Well,
Or
yeah.
or could she rent it out? Could she say she's renting it to her
So
son, I guess? I'm
I
not quite
I
sure
don't.
what she's implying.
So this I guess that is actually one question I don't know and I haven't thought about. So the question it would be, what is so there's obviously the capital gains portion, when she sells it, she pays a gain on that. But what happens during the year? Like at the end of the day, it's say it's an investment property, but she has expenses on it, but her son's not paying rent, or assuming he's not paying rent. So I don't know how she would want to treat that from a tax perspective. I'm not sure, quite frankly. Like maybe the son pays some rent to offset the expenses. I don't know, actually. That's a good question. Again, that's probably something better for an accountant, like how they would treat that annually, because normally, obviously, you treat it like a business. You have your income, which is the rent, you deduct your expenses. if there is tax, if there is sort of income, and the income could include obviously the principal repayment. So we often think of the income as like the difference between our rent versus our mortgage and our taxes and all of these things. But you also have to include the principal repayment in that. And if there is a gain, she has to pay tax on that, right? So I don't know how they would treat it if her son's living there. I'm not sure what that would be like.
Certainly not as
Yeah, I don't, because it has a couple roles. Obviously, it's a family member, but yeah, I don't know how they would treat that from a tax perspective.
So certainly it's not as easy as saying, hey, I'm going to say this as a rental, deduct all my expenses
But I
for
have no
this
revenue.
business, but I have no revenue to pay tax on because the
Yeah,
son is not paying any, but he is my tenant.
I don't think you
So
could do that.
no,
Yeah,
I think you're definitely on thin ice. So again, consult an accountant about specifically what rules would apply. And it may be that, even having to show that market rent is being paid is the only thing that would really make that legitimate.
yeah, potentially. Yeah, exactly. They would basically estimate what the rent would be. And even if he doesn't pay it, I mean, perhaps, I don't know. Like, I don't know what
They
they
would
would
assume maybe that it's being generated as income.
as
So
income potentially.
yeah,
Yeah.
yeah.
What they
So
call like imputed rent. Like, what is the implied rent of the property? So for example, like if you buy a property through a company, like you can't just live there without paying rents to your company, like if you have a holding company, for example, right? Um, and like it's just you're not allowed to. You have to kind
well,
of
I was thinking that,
yeah.
yeah. And that's you could try and not do that, but that's actually a way of proving
Mhm.
to the CRA that you are treating this as an investment property in that manner. It's above
Yeah.
board, right? So that's what made me think of that in this situation. You really do have to back that up.
And people actually kind of miss that one, which I'm going to call it as like a tax advantage or benefit of owning your own home, right? Like we think about the principal residence tax, the capital gains exemption, right? But the other is that, the like when you own a home, like you play the role of like tenant and landlord, right? But the implied rent on the property, you don't get taxed on, right? And they call that imputed rent. And you would have to obviously get taxed on it if it was a company buying it, even if it's your company and you're living in it, right? So that is one of the other kind of tax benefits. I don't know how it would work if it's in this unique situation with her son kind of living in a property that she owns as an investment.
All right. Well, Layla out in Brantford, I hope you have an accountant that you really like. Please get in touch with them.